Back to market on close with just a few minutes left in the trading day. It is time for the big picture. So let's welcome in our team from Charles Schwab. Joining us, we have Collin Martin, the Director of Fixed Income Strategist for Schwab Center for Financial Research, and Joe Mazzola, the Head Trading Derivatives Strategist at Charles Schwab. Now, Joe, we'll start with you. What are your takeaways from the decision today?
Well, I mean, look, I'll defer some of this to Collin because he knows a little bit more about this than I do as on the fixed income team. But I will say this: it wasn't just the leaving the cuts alone. Everybody was expecting that. I think where the Fed maybe diverted from maybe expectations was this idea that slowing growth, higher unemployment, and then cutting expectations for interest rate cuts in 26 and 27. That's not exactly a great mix for markets, but the markets are holding up resoundingly well. To my surprise, we saw a little bit of a pullback, but they've held up. And Collin, I'm interested in hearing your thoughts on this as well too. I'm keeping an eye on the MOVE index just to see if we're starting to see some volatility in fixed income. It's starting to firm up a little bit, but maybe a little bit less than I thought it would at this point.
Now, Collin, I do want to send it over to you before we get into market action. Just what are your general takeaways? I think we're all sort of a little bit confused, and there was a little bit of surprise about how much Jerome Powell acknowledged the uncertainty going forward.
I think that's it. Uncertainty is here to stay. Even though he acknowledged that uncertainty has come down and diminished, it's still elevated relative to where we were, in 2024, for example. There was a lot going on in this meeting, and I think you need to unpack each thing kind of individually to get an idea of where the Fed committee members are and what they're thinking. Because a big headline following the release was the idea that the dot plot was still suggesting 2 rate cuts this year. I think there was this idea that maybe we'd see some shifting from various Fed officials revising up their projection of where the rate would be by year end, therefore reducing the number of expected cuts. That was maintained at 2. But if you look below the surface, there actually was one more member projecting in 1 cut or less this year. And there's actually 7 participants who are projecting 0 cuts by the end of the year. So even though the headline was 2 cuts projected, there's a relatively large number who are saying not so fast. That's not in my forecast right now. Also, if we look at the economic projections themselves, Joe hit the nail on the head. We got lower growth forecast, higher unemployment, and higher inflation. And when you look at that unemployment and inflation upward revisions, that suggests that the 2 parts of the Fed's mandate could be in tension or at conflict down the road. Powell reiterated his point that he's made previously about how far away each of its mandates are from its goal. And if you look at the projections, the upward revision to the unemployment rate was relatively minor. We're looking at 0.1% over the next few years each year, relative to what the March projection was. But if you look at that inflation projection, 3% for headline PCE, 3.1% for core PCE, that's a relatively big jump. So that tells me that the Fed is paying very much attention to the inflation outlook. And Powell talked about the tariffs and how they expect it to work its way through the inflation numbers and prices as the year progresses. So despite all the uncertainty, despite everything that we heard and saw in the updated projections, I think it's that upwardly revised inflation forecast that's the key driver right now. And even though that median dot suggests 2 cuts, I think we could see that even change as the year progresses.
And Joe, I want to come back to you for some of the market action. I saw some research earlier today that said during the past 10 Fed days that the S&P generally spikes on the announcement and then cools off after Powell's announcement and into the close. We did not see any action that looks like that at all today. I'm looking at it. We're all over the place. What's the differentiator here?
I wish I had the answer to that one, Marley. I really do. I thought when I read the report and I kind of digested some of the information, I did foresee a sell-off coming. I thought you'd see a little bit of a spike in rates. They ticked up a little bit. Market ticked back a little bit. I keep an eye on tomorrow, though, too. Tomorrow the market's closed, but I keep an eye on Friday. I think part of this, there's still a lot of uncertainty, not just around kind of where we're at from the Fed's perspective, but I don't envy Fed Powell. He's in a really tough position right now because none of us have any certainty in terms of what the tariffs are going to be. I think there's just this belief that extension is going to occur on July 8th or July 9th, and it's going to give us another 90 days, and everything's going to be okay. And I don't know, but like I said, the markets seem to be digesting it pretty well. From all indications, it's still a near-term or intermediate-term bullish market, and until we get a catalyst, no matter what that is, it seems to want to kind of continue to melt up.
And Collin, coming back over to you, with the Fed's mandate seemingly in conflict now with those revisions that they put in place into this next meeting, now that the dot plot seems uncertain because there was sort of a more widespread dispersion than expected between the votes for how many cuts, do you think the markets will more aggressively digest the information out of the next meeting, or are we just desensitized overall?
I think we might be desensitized. I think we're in a holding pattern right now. There's a very, very low likelihood of any movement at the July meeting. So I'd say there's a very near zero likelihood of a cut then, just because we're not going to get enough data given where we are now and then what we'll see in the next 6 weeks or so. I don't think there'll be enough data there. We also won't get updated economic projections at that meeting. So it's all going to hinge on any statement changes, which have been very minimal over the past handful of meetings, and then what Fed Chair Powell says. It was interesting in that today there were very few or maybe no questions about timing looking forward. A lot of times reporters tend to ask about what are you thinking for next meeting or later this year, and that really wasn't asked. And Fed Chair Powell didn't really offer any insights there, but there was no discussion about what they're going to do in July. I'd say it seems highly unlikely that anything happens there. Our case was, and I'd say probably still remains at this point, 1 to 2 cuts by the end of this year. But I'd say the risk is to fewer rather than more. And the timing of that cut still seems like September or later. And I kind of give that wide range because these times are so uncertain. We're not sure what's going to happen with tariffs and how that's going to play into the inflation outlook. So 1 to 2 cuts, risk to the downside. And that first cut's probably not coming until September at the earliest.
Well, thank you both for today. We appreciate your insight on all of this. Again, that's Collin Martin and Joe Mazzola from Schwab.